Today we will be discussing a case study about Amazon, Apple, Facebook and Google. So firstly we have what is company's vision statement. So vision statement of Amazon is to be Earth's most customer-centric company, to build a place where people can come to find and discover anything they might want to buy online. Vision statement of Apple: to make the best product on earth and to leave the world better than we found it. Vision statement of Facebook: people use Facebook to stay connected with friends and family, to discover what's going on in the world and to share and express what matters to them. Vision statement of Google: to provide access to the world's information in one click. After that we have what is the company's mission. The mission statement of Amazon is: we strive to offer our customers the lowest possible prices, the best available selection and the most convenience. Mission statement of Apple: to bring the best personal computing products and support to students, educators, designers, scientists, engineers, business persons, and consumers in over 140 countries around the world. Mission statement of Facebook: to give people the power to build community and bring the world closer together. Mission statement of Google: to organize the world's information and make it universally accessible and useful. After that we have what are the key issues. These all companies are competing for digital marketing dominance rather than making collaboration to gain combat share. Don't explore the market properly because they are more focused on the advertising. They underestimate that only 26% of Americans spend time offline, yet the advertisers spend only 20% of media budget online. Offline broadcasting costs are increasing annually, and additional $169 billion on direct marketing and advertisement in comparison to online advertisement, which was $37 billion. What are the market cycles of the case companies? According to the analysis of case, Amazon, Apple, Facebook and Google are in the first cycle market. The reason is that the company's product and services offerings are easy to intimate and it is not costly for their competitors. After that we have exploration of various alternatives and effect in decision making. Online campaigns and promotional activities to get customers involved in more and more online and to make a way to grow online advertisement through this. These companies must consult with professional and advertisement agencies to make their platforms much more user-friendly and to consult them about engaging customers to remain at the website for a longer period through free products, and major events may be helpful in engaging them. These are tech giant companies with large banks of resources in their vaults. They can use them to get CPM lower than offline advertisements for sponsors, so they could have a provision to make their transition towards online advertisement. Make alliance to compete the offline advertisement by charging low CPM. Invest in research and expenditure and diversify their business. After that we have choosing the best alternative and your recommendations for preferred outcomes. We can see that Google take role in every segment of battle. It's good step to make their company bigger, but Google should also maintain their lead position in search engine sector by innovation and technology. Apple, Amazon and Facebook has their own leading sector. As Google keep continue acquisition to take share on rivals' three markets, they should find a strategy to fight Google rivalry. Marketing firms court the favors of social commerce platforms. Self-sufficient marketing systems of online merchants like Amazon let other merchants bypass the tolls will help them grow. After that we have Pastel Analysis and any identify key factors and counter strategies. So firstly we have political. Government stability and likely changes, bureaucracy, corruption levels, tax policy, rates and incentives, freedom of press, regulations, deregulations, trade control tariffs. So, firstly, Amazon. Amazon is a worldwide range of e-commerce offerings. Amazon works overseas, so distributing and the profit must be implemented by the government. Apple, heavily based on Chinese production of reduced cost. In China, social and political turmoil could interrupt manufacturing or boost the cost of manufacturing. Facebook, developed nations, political stability, popular support for globalization from the government. The Chinese market's political obstacles, online information, political interventions. Google. Google's monopoly is widely criticized. This has resulted especially in the Europe. To antitrust intervention, calls for Google to be split up or alter the manner it performs surveys have been issued. This isn't much effect on Amazon, Apple, Facebook and Google from the political factors, therefore it shouldn't focus more on creating counter strategies for this factor. After that we have economic. So Amazon retail is one of those sectors that can beat economically and continue to be lucrative. It's not industrial, but distributors will always need to products. Disposable revenue is greater these days, enabling individuals to spend on lavish products and live more frivolously. Plenty of both discovered on Amazon. Apple. In some developed countries, including the United States, stagnating middle class revenues could reduce the prospective market for higher end consumer goods such as those manufactured by Apple. Increasing labor cost in China can also take benefits of the reduced prices. Facebook. Increase in certain states disposable revenues. Google. Google has built up enormous amount of money that can be inflated. A sudden fall in the elevated stock price of Google might harm the firm by decreasing its market capitalization. There isn't much effect on Amazon, Apple, Facebook, Google from the economic factor, therefore it shouldn't be more centered on counter strategies. After that we have social. So with Amazon seeing hundreds of products at home without even riding to industry has been simple. And that's what customers want. But Amazon has a negative impact on health of the public as obesity increases, as individuals can do shopping by staying at home. They don't stop going to buy products. Apple. Consumers in those industries and younger individuals in Apple's settled economies like United States have powerful emotional attachment to Apple's sales-driven products. Mobile phones. Social media are increasingly being used as chance for Apple to grow its company. Facebook. Facebook's crowd is varied in the era and interest, including adolescents, researchers, celebrities, leaders. Concerning Facebook's privacy, it's not much personal and individuals are very worried about their privacy. So that's why some individuals hesitate to use Facebook. Google. New cultural developments and altering demographic patterns can be good or bad for the company of the Google. Increasing social media usage is a danger to Google. On the other side, enhanced use of virtual teams and other developments such as telecommuting has also resulted in enhanced use of applications and facilities from Google. People are distrustful of the data Google provides. So, Amazon should open some physical retail shops for health issues so that individuals can go and select their products and then order online. This is not going to create them lazy. Apple's increasing use of brand is a chance for Apple to introduce its products in the fields of individuals are unfamiliar with Apple products such as Africa. By bringing low-cost devices and other Apple products, they can catch the market. Facebook should concentrate on decreasing Apple's privacy concerns by creating Facebook account more personal for privacy issues. Google should provide more genuine data so individuals can readily test on them. Google can buy a stake or share in the business of rivals so the threats can be eliminated through collaboration. After that, we have technology. Amazon is a technological firm, so its earnings can be significantly affected by these variables. To deliver their products to clients, they depend strongly on various degrees of the technology. They experiment with fresh and innovative methods to get their gifts from the clients, like the shipment of drones. Apple is also a technology firm, so it can have a major impact on the Apple business, trend towards cloud computing, integration of technology, growing market for applications. Facebook. This technology-based company has a significant impact on Facebook, increasing mobile device utilization, increasing amount of social media business internet, online retail diversification. Google. Some rivals, particularly Amazon and Microsoft, have developed such common and efficient research algorithms as Google's. With its alternative, Amazon was willingly to dominate shopping studies. This is a powerful chance that at some stage a rival might come with a stronger search alternative than Google. These businesses are focused on technology, so they should spend in research and development and bring creative goods and facilities to stay ahead of their rivals. After that, we have environmental. So, effect on the business results, the laws and laws for health security in the distinct nations, consumer environmental issues including packaging and recycling issues, increased attention to corporate social responsibility, legal and environmental variables don't such affect on Amazon, Apple, Facebook and Google. For these variables, it shouldn't be more centered on creating counter strategies. After that, we have legal. So these are the factors that are rules and regulations of the countries. Like we discussed, these factors doesn't have much effect on those companies. After that, we have to use Porter's 5 model and counter strategies. So firstly, we have critical factors, then each company. So threat of substitutes. Apple. It is low. Reason. Offer convenience to customers. Amazon. It's low. Reason. Its unique features helps them that there is no any imitation. Facebook. It's also low. Reason. Its unique features make it more attractive. Google. Low. Reason. The image of being most famous search engine that keeps substitute away. Threat of new entrants. Apple. Low. Reason. Easy to create an online retail store but difficult to reach at Amazon's level. Well established and have first mover advantage which will keep the entrants away. However, the low interest cost may encourage them. Amazon. Low. Reason. The capital intensive industry keep the potential entrants away due to heavy switching cost. FB. Moderate. Reason. The growing trend attracts new potential entrants to grab the market and have a chance to earn profits. Google. Low. Reason. Moderate cost of doing business. High cost of brand development. Google has captured the market by investing heavily on search engine business, so it is hard for potential entrant to think about getting a piece of pie from Google. Bargaining power of suppliers. Low. Reason. As it offers diversified products that show less dependency on the suppliers. Amazon. Low. Reason. It has its own hardware and software producers. Facebook. Low. Reason. Its suppliers are advertisers that provide benefits to them. Google. Low. Reason. High availability of the suppliers and large population of the suppliers, its diversified portfolio of the suppliers and services keep the suppliers stuck with it. Bargaining power of buyers. Apple. Low. Reason. It offers variety and convenience at low prices. Amazon. High. Reason. The choices are available for buyers to switch, however, by offering the differentiated products, help them to maintain their position. Facebook. Low. Reason. It continues to invest in research and development that can increase their capabilities. Google. Moderate. Reason. Small size of individual buyers, high and increasing demand for buyers. The customers feel more convenient in using Google's search engine. However, other options from competitors may attract by offering something unique. Intensity of competitive rivalry. Apple. Moderate. Reason. There are less direct competitors and they are market leader that will sustain the competitive rivalry. Low. Amazon. High. Reason. In technology, the fast pace of change keeps the competition always stronger among the big boys of the industry. Facebook. High. Reason. It is recommended that Facebook must diversify its business to minimize the risk while exploiting the additional sources of the revenues to keep organization growing. Google. High. Reason. High diversity of the firms, low switching costs, the technology invites innovation, and having diversified set of services, it faces huge competition to sustain the market.